Factory overhead cost refers to any indirect product cost. When I say applying factory overhead, it means the company must estimate the amount of factory overhead incurred for a particular job using a logical rate. Now you are probably questioning, why must we estimate the factory overhead cost? Isn't it more accurate to use the actual factory overhead cost? Well, yes, it is indeed more accurate to use the actual factory overhead cost. But there's a practical problem when we use the actual factory overhead cost. It is often too late by the time the company incurs the factory overhead cost. Information about the actual factory overhead cost is only known when the cost is incurred. Often, the company needs to know the cost it will incur early so that it can make proper managerial decisions. To illustrate what this means, consider the following situation. The company is in the business of producing and selling cakes. A customer approaches the company and requests for a cake customized to the customer's specification. The customer then asks how much the cake will cost. Now the company is concerned about its cost of production. It will incur several factory overhead costs like maintenance of its machine, utilities, rent, depreciation, and others. For some of these costs, like maintenance, utilities, and indirect materials, the actual amount incurred for the year will be made known only at the end of the year. Can the company reply, "Sorry, I will only know how much it will cost me to produce the cake at the end of the year. Can I get back to you at the end of the year?" If you were the customer and receive a reply like this, what will you do? You'll probably run away and find another shop to fulfill your order, right? This is what I mean as actual overhead cost information is not provided timely. If the company can make a reasonable estimate of the overhead cost it will incur, it will definitely help the company when decisions need to be made, such as whether to accept a special custom order. To estimate the factory overhead cost, the company will typically compute a factory overhead application rate. Then, it will multiply the overhead rate by the basis used. First, the company will compute the factory overhead application rate by making an estimate of the total factory overhead it will incur and divide it by the basis used. To make an estimation of the total factory overhead cost for the year, the company needs to use the following pieces of information: the amount of fixed overhead cost it will incur, the number of units it plans to produce for the year, and the amount of variable overhead costs incurred per unit produced. Let's go through an example. Assume these are data about the company's cost. How much is the estimated total factory overhead cost? Depreciation, rent, production manager's salary, and insurance of factory are fixed overhead costs. Given that the company expects to produce 40,000 units for the year and that it incurs $2 indirect material cost per unit produced, the total indirect material cost for the year is $80,000. Take 2 multiplied by 40,000. The utilities cost will be 5 multiplied by the units produced, giving us $200,000. For maintenance costs, we noted that it is $1,000 per 4,000 units produced. If the company plans to produce 40,000 units for the year, that means the maintenance cost will be incurred 10 times. So we will take 1,000 multiplied by 10, giving us $10,000 for maintenance costs. Hence, if you add all these costs, the total factory overhead cost amounted to $858,000. When it comes to choosing a basis to apply the factory overhead, the company should choose a base that will vary closely with the overhead cost incurred. Some commonly used bases include direct labor hour, direct material use, and machine hour. If the company relies on a labor-intensive manufacturing process, it should use direct labor hour as the basis. If the company's overhead costs vary greatly with units produced, it should use direct material usage as the basis. And if the company's manufacturing process involves a lot of automation, machine hour is a suitable basis. The company needs to collect data about these bases expected to be used. Coming back to the previous example, where the company expected to produce 40,000 units for the year. To produce 1 unit, it uses 1 direct labor hour, 0.5 kilograms of direct materials, and 1 machine hour. To find the total base used, we will multiply the figure by 40,000. We would then take the estimated total factory overhead divided by the total base used to get the factory overhead application rate. Here are the application rates obtained by using the 3 bases. After we got the factory overhead application rate, we will apply the factory overhead by multiplying it with the actual base used. Referring to the previous example, let's assume these are the actual base used during the year. So this gives us the following applied factory overhead costs. At the end of the year, when the company knows the actual overhead cost incurred, it will compare the figure with the factory overhead applied. If the actual overhead cost is greater than the applied overhead cost, it means the company underestimated its overhead costs. When it underestimated the overhead costs, the work in progress, finished goods, and cost of sales figure are understated. Generally, to settle the variance, meaning the difference between the applied and actual overhead, we will make adjustments to the cost of sales figure. In the case of under-applied overhead, we will need to increase the cost of sales by the amount under-applied. If the applied factory overhead is more than the actual overhead, it means the company overestimated the overhead cost. The variance will be settled by decreasing the cost of sales figure. Coming back to this example again, let's assume the actual overhead cost incurred is $965,250. So here are the variances and further actions required under each of the three bases.